Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 1.4% on the S&P. Looks like Nasdaq is up close to 1% there. Semiconductors lagging today. That's not too bad as semiconductors still in that consolidating phase after a huge move. Did you know that semiconductor made 170% or so, 160% since the March lows? I'm not talking about semiconductor stock. I'm talking about the entire sector did. So I don't blame that semiconductors been kind of in that consolidating mode. Dow up close to 2% there. Same with the small caps up 2%, banks up 2%. Energy led the entire market with a 4.3%. Transport 2% there, biotech 1%, pharmaceutical 1.2%. Emerging market is up a little bit. Grayscale Bitcoin continues to see weakness here, down 7% today. Gold, silver, miners up about a 1% or 2% or so. Dollars down a little bit. Oil's up, treasury bond down, and VIX is down. No surprise there. Let's stick with the spider 65-minute chart here. So, well, you know, I kind of went in depth with the weekend analysis that I did over the weekend. Hope you guys, I'm sure you guys, most of you guys watched it. If you haven't, you know, there's a lot of things I've talked about there. Looking at things in the long term, right? So looking at the 65-minute chart, obviously there was a big gap down, but again, that was the ex-dividend day, so the gap was steeper. So if I actually go to the cash market here on the actual index itself, you can see that the gap has been filled, right? So the gap has been filled. And that's what buyers needed to do to fill that gap. Not to mention, buyers opened up their own gap here, and that gap is sustained, not being filled. We're kind of far away from it. But let's go back to Spider. So how are we going to deal with this ex-dividend gap, though? Well, I know that it's not a real organic gap, but you know, I've been analyzing Spider, I don't know, most of my career, and I mean, Spider is my favorite index to analyze, and so this is why I do these daily videos analyzing Spider, because I love to do them. But what I've learned through through analyzing Spider all these years, that these ex-dividend gap downs, they actually do provide resistance. It's kind of peculiar in a way. So we would have to kind of give some weight on this gap until it gets filled. So this is what I'm going to say. So you can see, and something that I talked about on the weekend analysis, that you know, there could be a Shenanigan gap up, and today, you know, the action that we saw today is definitely that Shenanigan gap up because most people didn't see it. So this little turbulence that we saw, the tankage in the last hour, drawdown, right? People didn't want to go to their Father's Day event holding some longs, right? Market pretty much gapped up and rallied all day long. So that's definitely, we can label this as a, Shenanigan up move today, because everything looked quote unquote looked bearish. This is why you want to stick with the long term, understand not only the short term but the mid term, the long term, the primary, right? Again, we talked about that on the weekend video. So right now, the short term moving average has been reclaimed. You can see support, resistance. Now looks like at least last couple hours is acting as support. There's a reason why I put 420 and 419 as my micro term supports, because 420 is going to be important because that's the level where it is coinciding with my short-term moving average and prior support. So that's going to be the micro term support going into tomorrow. And then I put in 419 because that's my short to mid-term moving average. You see this guy right here? Well, definitely this guy has some resume, right? Well, it's coming down right here also, right here, right? We reclaimed that quickly and then got up here. So should there be any kind of slide? Could we see the prior support acting as new support? That's a possibility because again, it carries some weight. Just understanding that we did see some of those, that action right? The price, when we started selling, it slowed down pretty much. I mean, pretty much that moving average slowed down the entire day or two. Think about this guy. I mean, this guy, we saw abrupt sell-off, right? Remember, this was a big gap down, ladies and gentlemen. Look at that. It's a huge gap down. That was it, and we made that rally. So we want to give some weight on this. So that's 419 and 420, right? We got the short-term moving average, and we got short to mid-term. So what's the best case scenario for the buyers? Gapping it up. Again, the ex-dividend gap downs do act as resistance more often than not, right? So from my experience analyzing Spider for all these years, so I still do want to see this gap getting filled. The best case scenario, just gap it up. Don't even deal with the ex-dividend thing, and then just continue higher, make a swift transition back up to the new all-time highs. If we start to fizzle here, not getting filled, I do think that this gap, again, I get it. It's not organic. It's not real gap. It's ex-dividend gap. Again, from what I've learned over the years analyzing Spider, these ex-dividend gap downs do act as resistance. I've seen it many, many times. So I still will feel better if we can fill this gap or gap it up for the best case scenario. So with this gap kind of open, I have to say, you know what? In the short term, I'm not quite ready to give fully bullish yet, but I want to say neutral to bullish because we just reclaimed that short term. However, it's just for a couple hours. We need to see how it deals with it. Probably next couple days, I think, and also that the ex-dividend gap's still open there. So I want to see how they're going to deal with these two moving averages and micro term, support area. If you're a bear here and you just hate it today was very, very difficult day for you. And we all go through those days, man. Well, what you want to see is you want to see this gap remaining open, and you want to see obviously some tankage here and then retesting this gap area. Bulls opening up this another gap that makes this move that much stronger. But again, bears just need to come back down because there's going to be another cushion that bears have to go through, and bears kind of come. And obviously, first things first, just coming down here. I think that's the first thing you should worry about, and then ultimately filling this gap. So I'm going to zoom out here and show you the impressive resume, guys. So this is the impressive resume midterm moving average. This is not a coincidence. This is not a mistake. This is not a random occurrence that we did see price tanking to that level. We stopped there. We saw a huge rally. We saw another tankage. We did a little double bottom twice, another one here, and then made a move. And then we saw another gap down on Friday. Right on it, we closed on Friday. It's not a mistake or coincidence or random occurrence that we stayed right there above it on Friday, and we gapped up and we made a move, right? None of this is just random chance, right? So these are the levels that we want to understand, and so you can at least got certain expectation. And remember, we talked about, we also did this little Fibonacci analysis over the weekend, right? Give you that little that peak there, and there's that low here, and then it came down to that 50%, which is residing with that midterm moving average. Not to mention the gap just got filled. We talked about that area becoming much stronger support because one, gap just got filled. You guys understand when gap gets filled, what happens? Instant support. Two, we got the midterm moving average. What is midterm moving? The impressive resume guy, right? Three, we got the 50% retracement just right on it, down to the cent, right? And then we saw a very, very strong bounce. And so we want to give benefit of the doubt to the buyers in the midterm. That's what we talked about on our weekend analysis, looking at things long term. In the midterm, it's bullish, and it looks like bulls trying to kind of change that sentiment into short-term bullish. Let's check out that oscillator, see if we can extract any more information. So that oscillator right here, we haven't seen oscillator, advancing and separating this much this entire time. We got a little move here, didn't look too confident, didn't look too confident. Well, that looks pretty confident to me, and looks like also we might be breaking out on oscillator resistance here. So But one thing we know for sure in the last month or so is that this market never had a follow-through day. Do you know what that means? We've had one-day bullish days. We never seen a follow-through next day bullish day. Never. Since early June. We've never seen it. That's the reason why we've seen these crazy whipsawing action on this oscillator, and I haven't seen my oscillator do this since COVID lows. This is first time seeing so much whipsawing on the oscillator, right? The reason is because this oscillator favors the momentum. There was no momentum because every time we see one day move, next day it tanks. Next day, we just didn't get that traction. Even today, that's a one day move. That's a big move, but still that's a one day move. We still need a follow through. And because this move is larger than any other one-day moves, I think we can say there might be a good chance we can maybe consolidate for a day, and then maybe on Wednesday we can make a move. I think that still counts for follow-through continuation, right? But we want this momentum to continue. For this momentum to continue, we need what? A follow-through, because we have never seen a follow-through in the month of June. So if we can see a follow-through, if we see like a gap up and big, huge move tomorrow, this thing will go all the way back up to the top of its band, and that's what bulls want to see. Let's see how it plays out. We'll go from there. You guys enjoy the rest of this evening, and good luck trading tomorrow.